What's up YouTube, Car Boss here, back in the video where we talk about cards, money, investing, and welcome to By the Numbers series episode number 7, which we're going to discuss this 2012 Panini Kobe Bryant Anthologies series. Now, for those who are not familiar with this old Kobe set, it's a 200 base card set with a number of parallels and memorabilia cards, as well as the autograph cards that's number out of 24. And these were actually inserted in the 2012 Panini products, right? So they come in 5-card packs, and they were available in 1 pack per box. So there was a lot of these printed, and they come in the same paper stock as the 2012 hoops. So these are the ones with the black edges, right? That's extremely prone to edge wears and stuff like that. So today you can actually hop onto eBay and buy a raw cards of these 2012 Kobe Bryant Anthologies for between maybe $2 to about $5 each. And the autograph cards, which I said was our number to 24, which are pretty scarce, they go for about like $2,000 each on eBay. For today's video, we're going to explore my experiment with these number of anthologies. As you can see from the top screen here, how many that I bought from eBay. And as always in the by number series, we're going to crunch all the numbers and get right down to how well we did. Alright, let's go. So first, allow me to be very clear, right? So these 2012 anthologies is not really an investment potential card, nor I foresee this card doubling or tripling or 5x in the next 5 to 10 years. But however, it is a very collectible set, right? It has great photography, and it captures all the great moments of the late Kobe Bryant career leading up to that point. Hence, while the cards are desirable for set collectors, but these are printed in hundreds of thousands, right? As I mentioned earlier, they were distributed in every single hobby box of the 2012 Panini releases. So therefore, when I first embarked on this journey, it wasn't my intention at all to to buy and then to grade and things like that, like what usually you would do. In fact, they were actually acquired so that I could sell them back to my local market, who I knew there were a bunch of Kobe collectors that had kind of like tight budgets, right? So I wasn't looking much to make a lot of profit out of this, maybe between 50 cents to $1. So when I bought this lot of 168 Kobe's, I was just expecting to make about $100, for my troubles. But here's where things change a bit. So the math is pretty simple. I paid roughly about $180, including shipping and all, for 168 cards, which worked out to be about $1.10 per card, and was going to make between the 50 cents to $1, selling it locally. And but when I flipped through the cards when it first arrived, I realized that a good stack of them were in pristine condition, almost packed fresh. So this got me thinking on the viability of sending these cards to PSA for grading. At that time, I think the PSA, the value submission, was still going for about $15 through a group submitter. So, but like any mass-produced raw cards such as these, right? Was there really a market for these cards? Now, running through, going back through time, right? So that was around early 2021, where there's a starting point of the GOAT chase, where that 1986 Fleer Michael Jordan rookie card PSA 10 sold for in excess of $700,000, and that started a chain reaction. This rippled across the other GOATs like LeBron James and Kobe as well. So even your base cards, such as this anthologies right here, was selling pretty well, right? So I believe that each of these anthologies PSA 10 was going for about $100, or maybe even more than that. I can't remember the exact pricing, but it's kind of ridiculous to think that you paid $1, kind of like $1 for the raw card, and say $15 for grading fees, which will then flip this card for about 5x, right? So that translates to about $80 in profit in totality, and you multiply that against, let's say, 50 PSA 10s, and then you're making a $4,000 profit on essentially a $1,000 investment. However, I don't think it's as simple as it sounds. I think a lot of people has a poor misconception about price horizon. Historical facts points that assets increase in value over time. Some exponentially, some maybe at a gradual rate, but upwards nonetheless. So unfortunately, there are two flaws to this theory. First, what is the correct classification of an asset, and whether your expectation of what I call price horizon is correct for that particular asset. Now, if you're talking about, say, for example, real estate, so there's no denying that this theory is true, because people need to live in a house today, and people need to live in a house in 20 years from now. So you have things like inflation, increase in general population, and basically overall increase in general demand that will drive the prices upwards, right? And so the price horizon for real estate is always on the up and up, right? But in the case of cars, be it sports cars or Marvel cars, etc., the price horizon doesn't really correlate to those metrics. In fact, there's no certainty in the future that the number of card collectors 20 years from now, right, will be far larger than today. In fact, who's to know that it's going to be stagnant or maybe even shrink, right, and become niche collectibles, right? The point is, people are very loosely gauging the approach or the measurement of these price horizons, right? In my previous video, I talked about writing off 20% of the value of my investments, and that's my conservative approach on price horizons on the short to medium term, right? So therefore, when I look at this this mass-produced Kobe's anthologies, right, I see the same thing, right? So maybe it's a flash in the pan. Like we're talking about 2021 here, where there's a gold chase, where the prices are all extremely high, and you would have reasonable expectation that this won't hold and this can drop down, at any moment's notice, for example, right? So rather than imagining a high return or a high yield, I was just aiming for a modest profit, about $10 per card. So right off the bat, I set aside 67 cards that were to be sent to PSA for grading, and immediately I sold the remaining 101 cards, which I planned for about $1.50 to $2 each, as I expected, right? So that sale alone basically covered my entire cost base, and I was essentially free rolling my 67 cards that I sent to PSA for about $15 per sub once you add in a bit of shipping. So with a profit target of just $10, right? So I was looking to sell each card on average about $25, well under the price horizon which I expected. But of course, who would have expected things like PSA to shut down and have my value submission pushed back for more than 15 months and returning back just recently, where we are in the middle of a price downswing. So, but nevertheless, let's look at the grades, right? So out of the 67 cards submitted, we have one PSA 7, 2 PSA 8s, 37 PSA 9s, and 27 PSA 10s. So the PSA 10s are 27 out of 67, so that works up to be about a gem rate percentage of 40.3%. Pretty good. So therefore, in my mind, these were amazing results in my opinion. So therefore, what's a net yield on this sub? At this point, the final numbers are still pending, so I'm still continuing to move some of these cards. But if you average, say, $20 on a PSA 9s and $40 on a PSA 10, I'm looking at a total return of $1,820 on a $1,005 investment. For roughly about $800 of profit. Modest returns in terms of financial numbers, but close to 45% yield, right, over that 15-month period. And if you analyze it, that works about 36%, which is still a solid percentile return. So until recently, since PSA shut down back in March 2021 and already gradually reopened, many are saying that the buy and grade game is starting to come back. But in fact, it's actually still a tough proposition, given that the cheapest grading option is $50 a card, right? PSA will gradually revert back to its lower fee structure. But the landscape of card investing as an investment has certainly changed, and but that's actually the beauty of card investing, right? It's a free-flowing market that requires you to be on your toes and consistently change your approach and to adapt to the constant shifts with the intention to make profit. Alright, that's all I got for today in this episode of By the Numbers series. Do check out other videos in this series as well and subscribe for future content. Right, thanks for watching, guys. I'll see you guys soon. Kabos out.